Hello, I'm Alejandro. I'm an eToro popular investor. I am Spanish, but I am also Australian. I have been investing for almost 10 years, and I decided to move into eToro because of the facility to be able to do copy trading. Basically, everyone wanted to invest with me, and I didn't have a way. So it was really easy to get people to copy me, and we invest together, and I was doing all the operations and they were just getting the benefits. One of the good things of popular investors and copy trading is that if I win, my clients win. Normally, I try to use a method of value investment in growth and in really good companies. So that method what tries to do is get companies that are really undervalued or going through a bad moment, but they are really good companies. And then you invest for the long term, right? There are bumps in the way, learning step by step, and then in the long run, normally good things happen. The assets that I am focused in eToro normally are companies, stocks, right? I do not use leverage because I think if you are buying into the right stocks, you are going to take the growth on the world and the inflation. And normally those are companies that are really good companies, right? Like for example, I invest in Google, Amazon, Netflix. What I try to do is analyze really good companies with really good moats. And then when the market or the people do not like them, buy them at a discount, right? That gives you a really good margin of safety, and that allows you to grow even further. So for example, now that the markets are a bit down, it's a really good moment to find those really good companies that are not really valued. PayPal, for example, invest in them and get them for the long time. So my strategy is based in fundamentals and also a bit of technical. I try to find and do an analysis on the best companies, right? I try to find good companies with really good and strong moats, competition, sometimes monopolies, and that will allow you to get a really big piece of the market thanks to those companies. Then you just try to find a bit of a time where they are discounted, and then you just buy in with certain percentage. I do a bit of risk management and portfolio management, and I also try to assess technically that they are the right companies and going with the right trend, and then just find for the good moment to do a bit of rotation. But then if I can, stay for the long term. So my tip for someone that has not been investing or it is your first time, it will be good for you to start with really a little amount, a small amount. Why? Because at the end of the day, that's what is get you going, right? To learn bit by bit. And for example, a really simple strategy if you want to learn is to start with just an ETF, SP500 for example, Warren Buffett method, that will allow you to have all companies at once. Just put a bit of money every month. That is going to allow you to grow. So, well, sometimes there are changes in the market, right? Volatility, wars, economical cycles, macro, right? Normally what I try to do is good companies stay there forever. If they have a really good moat, they are going to be like that. So my way of seeing the market is I just try to follow my strategy, right? I try to analyze those companies, and if there are changes in the market, my focus and my strategy is not to look into the news. Look at the facts, look at the companies, how they are going. Are they going slower or they are keeping up and getting that revenue, right? So if you look into the numbers are going to tell the truth. News are going to tell you fake news, right? And they are not going to be really important for you if you have a really good strategy. I have a strategy that looks into really good companies that are not really well valued at that point in time, so we enter with a margin of safety. People go with trends and they follow what everyone is saying, right? And they buy high and sell low. What we are trying to do is assess those companies, buy into a good opportunity, and stay with them for the long term. That's a good strategy normally because it allows you to grow with that company as it hasn't changed, right? It's only devalued because someone doesn't like it. That's why normally I have a better ratio than the market, because probably I am sitting in better opportunities than sitting in the overall market. We have two really important things in 2024. The Bitcoin halving that I think is going to drive probably a bull market in Bitcoin and crypto. So that is going to bring everyone to invest. And then we have also the election, right? That normally is a bit of a bull scenario because all presidents want to end the year with a bull run so they can win the election. So that means probably that maybe rates are going to slowly go down, not much, but I think there is going to be some good momentum. So I think we are going to end up in a positive way this year. I cannot look into the future, but I think if you are well positioned in undervalued companies, you are going to be doing more or less all right. And then it's just keep that consistency going on and not only look for 2024, look into the next years too. I love eToro and I like eToro because of the copy trading system. It allows you and people to copy other investors anywhere in the world, share those ideas, and also meet great people, right? So it allows you to also grow faster, learn more, get into investment more. And that's the best thing that eToro has, that sharing community and that commonality to help everyone achieve their goals with finances and investment.